Hi, this is James Zheng, and we're here with Perry and Ed to talk about their recent closing, Del Sol on Royal Lane. So maybe to kick it off, Ed, maybe give us a little background on yourself, and then Perry follow up after that.
Yeah, thanks for having us, James. Appreciate it. I'd started in real estate, I don't know, probably back in 2014 or so, just buying a couple single families. Never really got into it too seriously. It was pretty much just passive for a while. Then met Perry a few years back. We ended up investing in a couple single families in the Seattle area. We did a 7-unit deal in Tacoma, Washington. We've been trying to scale up in that area, and the market was just too crazy. We were kind of spinning our wheels in Seattle. So we ended up switching our focus to Texas, DFW specifically. I'd been living in San Francisco, Perry's in Seattle. So I actually ended up quitting my job. I was a paralegal at the time. Quit my job, moved out to Dallas, and I've been working on real estate out here full time since then. That was about a year and a half ago.
Right.
And we got this deal as our first kind of large apartment deal about 7 months ago now, September last year.
All right, Perry, give us a little bit about your background.
Sure. Hi, my name is Perry Zheng. I currently am an engineering manager at Lyft. I've been at Lyft for about 4 years. And before Lyft, I have always been in technology. So before that I was at Twitter, and before that I was at Amazon. I got into real estate around 2014, 2015 as well, when I bought my first condo in San Francisco Bay Area. And then after I moved back to Seattle, I did a few house hackings. And so now I have about 6 single families in Seattle. And we got into multifamily syndication about 2 years ago. And we closed on this deal with Ed in late 2019.
All right, let's just jump in. So maybe Ed, give us a little background on the deal and sort of how you guys found it.
So it was marketed deal. Grace Seal was the broker, and right around this time we had been making a lot of offers. We were pretty active, and the market was super hot, of course, at this time last year. And so when we came across this one, we saw a lot of opportunity. It was pretty run down, and I think that helped in a way. There was a bit less competition. I think some people were maybe a little scared off due to the condition of the property. So in a way that actually I think helped us out. Really just came down to us and one other kind of strong buyer who we did have to outbid to win it. But ultimately, I think it worked out pretty well. Really the biggest challenge was between the LOI acceptance and the contract signing. There was that huge storm in Dallas I guess it must have been June, right, of last year, that big hailstorm. And it actually caused a bunch of roof damage, and the owner submitted an insurance claim before we even went under contract. And then we had this, whole negotiation about how that was going to be handled. So that was probably kind of the big obstacle we had just to even get to kind of the signing table to get it under contract.
So maybe Perry, jump in and talk about sort of once you got the deal under contract. I know there was a lot of back and forth on the contract just in terms of proceeds, insurance proceeds, and things like that. Maybe talk about the debt and equity and how that went.
Yeah, absolutely. So we work with All Capital, and they're really good to work with. And James Zheng was our kind of broker. So we got a 12-year fixed interest rate at 3.87% Fannie Mae loan. It is about 75-76% LTC. That includes the renovation. In terms of the renovation, we are putting in about $1.4 million of CapEx budget. That's roughly about $8,000 per unit. The purchase price was $13.5 million. And we also got a 4 years of interest only. So on the side, we had to raise about $4.275 million for this deal. And yeah, we closed on time. And so no issues there.
So you guys sort of closed. I guess it was third or fourth quarter last year. So tell me about sort of takeover, what you guys have done so far in sort of that short amount of time.
Sure. Yeah, I can take that. So the first big project was definitely the roofs because they had sustained quite a bit of damage, and obviously leaks and things like that are a risk at that point. So full roof replacement, all 14 buildings. So that was a pretty big one. Insurance covered all of it, fortunately.
How much
So
was the cost on that, Ed? The roof
I have
replacement,
to double check, but
roughly
I think it was about 300,000
300.
roughly
Okay.
all told.
And how many units again?
172,
Okay.
172
All right.
units, 14 buildings. Yeah.
Okay.
So, I mean, in a way, it's sort of a 300,000, value add for free
Right.
right off the bat, since insurance paid for it, which was kind of nice. So definitely worth the hassle. Parking lot repairs, that was a required repair. Just some basic stuff. We didn't do a full like resurface or anything, just patching and resurfacing. We did a full leasing office upgrade. You can see the picture there of the new office. We did, then probably the single biggest project after the roofs is the foundation repair, which was also the main deferred maintenance item. That's just wrapping up right now. So that was on 4 buildings. The previous owner had done some of it already. And I think they basically just kind of ran out of money. Which is probably why they were selling.
Okay.
So we kind of had to take it over the finish line as far as the foundation repair. Some other things we did: landscaping, water conservation, LED lighting. So some of those energy savings type improvements.
Tell me about
Then,
the water conservation a little bit. Did you guys do
so
toilets and shower heads, or what else did you guys do?
Well, it's interesting because the toilets had actually already been done, I think even
Okay.
2 owners ago, maybe. So they
Okay.
had the low flow toilets, but when you looked at the water bills, it was like, it didn't make any sense because the water bills were still super high. So we knew there must be something like leaks
Okay.
like that going on. So we did do like the shower heads and the aerators, but the big thing with the water bills was the leaks. And so we spent a lot of time with SAS and Save Water Co. Both of those vendors going through just trying to pinpoint every leak, and so that was kind of a bit of a bigger project than we anticipated. A lot of plumbing issues. We've done a ton of plumbing work so far, but we've gotten it under control now, and it's really made a huge impact on the expense side.
So Perry, maybe talk about how much in CapEx you guys have spent, sort of how much left is in the budget, and how this is sort of driving sort of revenue and expenses going forward for you guys.
Yeah, good question. So I want to touch on the water conservation as well a little bit. So besides identifying the leaks, which is amazing, we also installed these kind of meters or these kind of smart meters to detect if there are any leaks. And they also gave us this dashboard to look at the water use every day. So if we see a spike, then we will be notified, okay, there's maybe another leak. So that's something also we implemented.
How many water meters are on the property roughly? Like, do
I think
you?
it's 5 or 6, right?
Okay. All right. So that's not too bad. Okay.
Mm-hmm. And yeah, they charge pretty reasonable. It's like, yeah, it's pretty cheap. So in terms of the CapEx budget, actually, do you want to take this one?
Yeah, I brought up the budget here so I can kind of give you the actual numbers. It's not completely up to date for May yet, but as of probably a month ago, we had already spent over $1 million on our CapEx. We had about 1.4 million total. So we've really done the bulk of the major stuff so far. At this point, it's pretty much just continuing the unit upgrades.
Yeah, I just pulled up your website here. So you did the parking lot there. It looks great. Some signage, and then I guess these are the wood balconies. How much is that on when you do that across? I guess that's the second level.
Yeah,
those
we
wood
didn't
panel,
do the
horizontal.
property.
Yeah.
We only did kind of the most visible part, like in that front area. Yeah, I think the wood, I can probably get you the actual number here. Let me just check real quick. Cedar, yeah, it was about 26,000.
So that's just like sort of in the front, like that front's like the main part of the rural lane, like the main street right there.
Yeah, I think it's 5 buildings. We did the two,
Okay.
4, one in the back. Yeah, about 5 buildings for the
And so
wood.
this is the leasing office sort of walking in.
Mhm.
And these are just like the little, I guess,
Yeah.
gazebos before. Okay.
Yeah, we're actually still planning on doing, if you go back one picture where there was that, yeah, on this one, our plan is still actually to do a soccer field where that gazebo is. So we're going to tear that down
Okay.
and do kind of like a mini soccer field there.
All right. And then maybe talk about interior upgrades. What are you guys doing at the property, and sort of, what's average cost, I guess, for if you're just taking, let's say, a normal unit and then taking it up a notch to your upgraded side. How much is that costing?
Yeah, so I can open that up here too, just to give you a better number. Yeah, I think on the normal upgrades, we're generally averaging around 5,000 a unit.
Okay.
And there's, on this property, there's a pretty wide range. So that would be kind of taking, a classic unit and doing this type of upgrade. But
Okay.
some of the units, like where we had the foundation work, were essentially full gut jobs, and those are a lot more expensive because it was basically a new unit at that point, new everything. So it is quite a range, but on just the standard upgrade, about 5,000 to get it to that level.
Yeah, also the other strategy that we implemented is for these units that need a ton of work, we hire a professional general contractor.
Okay.
And for things that are just normal wear and tear upgrades, we actually use the in-house labor to do those, like just paint and whatnot. And some furniture installation. So so I think that has definitely a big impact on saving costs.
Do you think, so it's about 180 plus units on the property. Are you doing like 2 inside, 2 outside on sort of your payroll? How's payroll? You said professionally managed here on the slide.
Mm-hmm. Yeah, we use Citygate.
Okay.
Yeah, 172 units. It's 2 in, 2 out. Yeah.
172. Okay.
Mm-hmm.
Great. I guess any sort of, maybe give me one thing that you maybe will do the same from what you did the past year, and then one thing maybe different that you're going to do different on your next acquisition. So Ed, maybe I'll start with you, and then we'll go to Perry.
Mm-hmm. Let's see. Same. I mean, definitely using a good management company.
Okay.
For
Good.
sure. And that was something we had put a lot of time into, finding a company that we really felt comfortable with. So that would be number one, I think, and good on-site stuff. Something I would do differently, I think, doing a little more planning on the rehab before purchase. So even during the loan period, I think delving more granularly into a rehab plan and kind of really planning that out more specifically.
So that once you close, you're just ready to hit the ground running. Because the clock's ticking, right? Mm-hmm. Like in terms of money, in terms of everything. Okay, got it. Perry, what about you?
Yeah. So things that we made good decisions on are choosing the right lender and choosing the right property management company.
Okay.
And those decisions have second order effects on how the property is doing. So we were very happy with Citygate. And the things that I will have changed are just the things that we didn't know. For example, and the tools that we use. For example, raising equity, we just use a plain spreadsheet. And it's kind of hard to track like which investors we should reach out to next, etc.
Right.
And then the same thing with all these documents that we didn't know that Appendix D, drawing the organizational chart.
Sure.
Have we know that we will, and also the presentation, the webinar and stuff. Mm-hmm. So the next time we do it, we're just gonna like prepare a bunch of templates so that it's easier to fill out, because during that fundraising, capital raising process, time is of essence. And so we shouldn't try to like reinvent the wheels on things that we don't need, right? So now we start thinking about a good process, like using the right tools, using the right software to do those things automatically.
No, that's perfect. What is the best way for, if people want to, maybe ask some questions to you guys, what's the best way for them to reach out to you? Is it email, phone number?
Yep.
Usually email is the best for me, but either way is fine. I would just say, yeah, shoot me an email. I'm always checking.
Yep.
All right.
Same here. Email is fine, or you can just add me on Facebook, Perry Zheng.
All right. Thanks a lot, guys.
Yep.
Thanks,
Thank
James.
you.
Appreciate it.